This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio. Thank you so much for being with us today. A special edition of Your Money Matters, brought to you by our good friends at Affordable Interest Mortgage. As I always say, your one stop for all your mortgage needs, 720-895-0500. And with that, we will welcome the owner of Affordable Interest Mortgage and a sponsor of this show, Mr. Kurt Rogers. How are you, sir?
I am doing just fine. I just love the look you have today. Now, the people can't see what you look like, but I've been around you for a long time. And you told me why you dressed up, but for you, I like the scruffy little look with the beard and all the gray in the beard.
All the gray in the beard, yes. Now, I colored that to go gray. It is very dark normally.
Well,
no,
it matches your hair, though.
Yeah, that's true. No, dressed up a little bit today. We had a lady in our church that passed away at a funeral this morning, and our thoughts and prayers go out to the Disney family, great folks of our church and great friends. And the beard is preparing for hunting season here.
I had a feeling that was
a few more weeks
stay
for my
warm.
Elk. Yes, sir. Yes, sir. Well, again, this show is all about your money. And, each week we try to bring you different professionals in different areas that have something to do with your money. No bigger area than our mortgages. And that's why Kurt will take over his own show once in a while and talk a little bit about mortgages and how he can help us. So if you've got any kind of mortgage questions, thinking about refinancing, am I getting a loan, a reverse mortgage, whatever, we'll open up the lines, 303-477-5600. So I guess we always start out with that few letters, RATES, rates. That's on everybody's mind. So what's happening now in our rates?
Well, there's rates haven't moved for the last couple of months, but one of the first questions I always get, do you think rates are going to go up? And eventually, yes. The question is, when are they going to go up? The talk is that they'll probably go up in December. What we have to remember, if you're thinking of a mortgage, when rates go up, they don't always affect the mortgage, because the government uses, when they're talking about raising rates, they're talking about raising the Fed's fund rate.
Okay.
What the Fed's fund rate is the rate that the federal government will loan money to the banks for. About a year ago, it was at 0.25%. Today is at 1.25%. So it's moved up a percentage point, but that has not affected 30-year fixes, basically. They're still the same they were roughly a year ago. A little bit higher, but not a lot, because it doesn't affect those rates. What affects mortgage rates are bond rates, long-term rates. That affects car loan rates. That affects credit card rates when you're talking short-term money, because it's money you buy for a short period of time and come back. Now, we're going to see rates go up. But I think as they start to go up, let's say in December and a little bit in January and February or sometime next year, that's not really a bad thing, because what it's basically saying is the economy's getting better and you can start to raise rates. With that, they'll raise incomes, because they'll have to make it work.
Right.
With the home values going up the way they are, you've got to be able to compensate to make some of this work. So I think it's going to happen. When they raise them in December, I don't think that they're going to move a lot. They might move 1/8 of a point, but they shouldn't take the full quarter that they're probably going to raise the rates. So it's a good time to pay attention to them, but yeah, they're going to go.
Right. So when we start talking about the effect, people always try to figure out timing. Is it the best time to buy a home, the best time to sell, the best time, when's the best time to refi? I mean, what are you looking at all of this having on the potential homeowners right now?
Well, with the rates getting ready to go up, actually, it's a great time to buy, because the advantage of getting into it now, if your homes are appreciating at, let's say, our average, which is 8 to 9% a year, and you take a $300,000 home, that means that home's making you about $25,000 a year.
Yeah, that's hard to beat.
That's hard to beat. So if the rate goes, let's look at a $350,000 loan. At a 4%, that payment on that loan is going to be $1,770. On $350,000 at 4%, the principal and interest payment is $1,770. But if that rate goes to 4.25%, that payment goes to $1,821. So by waiting, you could pay an extra $51 a month. Look at the long-term and short-term effect. $51 a month because of regulations and how they qualify you for loans, could affect you from being able to buy that $350,000 house. So now you have to look at a $320,000 house, and house values are going down. So while you're thinking about buying, if the rates do move, it might price you out of the market, because the average home in Denver is over $400,000. The hottest market out there is that 300 to 350. Well, now if they raise the rates, you might not be able to make it. If they raise that rate to 4.5%, that payment goes up over $100 a month. That will definitely affect what you can buy.
Sure.
So if you're thinking, actually, it's still a good time to get out there and look. We all know the story. There's not enough homes out there, but get the opportunity to go out and take advantage of the rates of where they still are, because you can get a 30-year fixed in the mid-threes.
And boy, anyone out there that's renting a home right now, you figure a 2-bedroom home, probably 1 bath, you're probably not paying $1,770.
That's another great point you bring up. If you're renting a house, the average rent in Denver is right around $1,700. That's taking in 1-bedrooms that are 700 square feet.
Right.
Okay. So when you look at a 2-bedroom or maybe 2-bath, you're probably paying $1,800 to $2,100 a month. You can actually buy a home for less than $1,770, because remember, I'm quoting a rate of 4% here for this example. Rates are better than that on a 30-year fixed. So you could actually purchase a $350,000 house for hundreds less than what you're renting for, and now start to take advantage of that increase in value. If our values don't continue to increase at 8 or 9%, let's say they only increase at 5 or 6, you're still making $15,000 to $20,000 a year, and you're paying less than 4% to do it tax deductible. So you're actually burning the candle at both ends, and the advantage is yours, not someone else's.
Right. Qualifying, a big word. A lot of people get sweaty palms when they start talking about it, because they think of all the things and all the documentation you need, all the different things there. So let's talk about qualifying a little bit and let you explain, what goes into actually qualifying for a mortgage.
Qualifying for a mortgage really hasn't changed from the basic requirements that lenders want. The biggest portion that has changed is the documentation to prove it. It's a loaded question, but I'll give you the basic things that any lender, whether it's a car loan or whether it's a mortgage loan, that they're going to look for. They want to know that you've been working. They want to know that you have money in the bank, that you know how to save some. They want to know what your past either car payments are, or your mortgage history is, or rental history is. They want to know what your FICO score is. Right or wrong, they want to know what that is. They want to also know what the loan to value is, what type of loan you want, which a lot of times people don't think that this matters on qualifying, but it's actually huge. Whether you're getting a conventional loan or an FHA or a VA or a USDA, or you want to do the asset manager or reverse, each one of those have different qualifying factors. Debt to income ratio. How much of your money that you make do you want to apply to your debt to income ratios, and will they fit for the qualifying? And then the last one is property type, because certain property you can get higher loans on versus some. Now, over the next few minutes, I kind of want to break down each one of those.
Yeah, that'd be great.
And the first one let's talk about is jobs. They're normally not going to give you a loan if you're not working. It is amazing how people will call every now and then and say, well, I'm going to be getting a job in a month. Can I get pre-approved for a loan? No, you can't. Now, if you get a letter from your employer saying we're going to pay you $70,000 a year to be an apprentice engineer, and we're going to put you on a contract for 3 years, okay, that's different.
Okay.
But that means you have a job.
Right.
If you come out of college and you don't have a job, but you're getting that letter to go into the same field, your college becomes your job history. Because going to college for 4 years is like going to work. There's times you have to get up, go to class, even though you don't want to.
Sure.
So that's how the lenders look at it. So having a job. Now, do you need the same job at the same place for 2 years? No. You really, in some cases, don't even need to be doing the same kind of work, and you can still get qualified. What they're looking for is stability in employment, that you don't have gaps in employment, that if all of a sudden you decide to take 6 months off, you take that, because the bank is saying, well, how are you going to pay us? Try to remember that a bank does everything by risk. The higher the risk, the more they're going to say no or charge you more money to get the loan. And the risk proven by people that don't have consistent job shows that the chances of foreclosures are higher, so they don't want to do those loans.
Sure.
So the job is a big portion. The next one is reserves and assets. When somebody asks you for reserves, they actually want to know what kind of money you have in the bank. Now, that doesn't mean you need $10,000, $20,000, $50,000, but it needs to show that you have an average daily balance in your banking account, that you're not bouncing checks, that you're able to put away some money for some kind of crisis that might come up. Your financial experts will tell you you need 6 months of all your debt. And that's ideal, but not all people can do that.
Sure.
You're fresh out of college and you're trying to get a job, or you move out of the house and you're working at a job that's paying you $12 to $15 an hour. It's hard to have $5,000 or $6,000 in the bank. It's hard to have that down payment. But they want to see something. They want to see that you understand how finances kind of work. Actually, Colorado has a state law that you have to have a checking or savings account. You have to have money in the bank to get a loan. And it's the only state that I know that does that, but Colorado has that law. The second thing they want to see is, how do you pay for where you live now? Most people that have a home, they have a history of it. But let's say in 2008 you had a home and you got rid of that home for however that happened, and you haven't purchased a home since. That mortgage history might help you depending on how you got rid of it, but at the same time, where are you living now? How are you making those payments? And are you consistent? Canceled checks, they're going to want to prove. If you're living with a family member or you're living with a landlord, they won't normally take a landlord's letter saying that you made your payments on time. They're going to want to see the canceled checks, or cashier's checks that you made. Mortgage payments are pretty easy because that lender will give them to you, but they want to see how you've made your payments, because how you do things in the past is how you're normally going to do things in the future. If you're not paying these, they're not going to pay those.
Right.
Pretty normal stuff. Okay. Then they want to talk about FICO scores, the ever popular FICO score.
And, here's just two things that bug me about this. One thing I think we need to make clear. A lot of times we will get these freecreditreport.com, all those different things. What we pull up for our own knowledge is probably never going to be the number you pull up as a lender. Is that correct?
Absolutely. Never going to be the same. Not even close. Because some of your annual credit reports that you run, that you get for free, will tell you your credit score is 900 or 1,000. There is no such
Do you
score.
always find, it seems like, it's always higher for the one that we get on ourselves
Correct.
than the lender pulls up.
Correct.
Why
Easiest
is
way to say that, that's a retail credit analysis versus a wholesale. And those folks that loan money, whether you're installment loans for like cars or motorcycles or boats versus credit card companies versus mortgages, have different systems that they score you on to determine their risk. Remember, we're going back to risk. A credit card company, and you see this all the time, somebody who files bankruptcy or has a foreclosure and their credit goes right in the tubes. About 3 to 4 months afterwards, all of a sudden they start getting all these offers. Why? Because according to the risk factors that they put into it, the credit card companies think you're a better risk and they can charge you a higher rate and make more money.
Because you can't file bankruptcy for them.
And you can't file bankruptcy again. So they're going to kind of give you that opportunity, and they're going to make sure you're what I call front-end loading it by charging you more. They're going to do that. I'm not saying it's right or wrong. It's just a fact of life.
Right.
That's how they do that. So the way they score your past credit is going to be different than the way a car dealership does. When they're doing the credit, they're looking for, kind of like what we are, stability and ability to be able to pay it back. So they're looking for, how'd you pay your last car? How many cars have you owned? How long have you paid them? Those installment loans will have more weight on your score than they will with us. What a mortgage company looks at is a conglomeration of all of them. They have a new thing out called trended data. It not only tells about your score, it says, how did I make my payments? Did I charge $500 up on a credit card and pay it off, or did I make payments on it? Did I pay it from $500 down to $300 and then turn around and charge it back to $500? And have I done that for the last 2 years? That determines kind of scoring and how the lenders look at it. So a mortgage bureau score is going to be completely different than an installment loan score versus a credit card score.
Right.
And each one of those has a cost to it.
You're listening to Your Money Matters right here on Haystack Help Radio. Again, if you've got any kind of questions about mortgages, our phone lines are open, 303-477-5600. When we come back, another topic on FICO scores that drives everyone crazy is we have 3 main credit bureaus, Kurt. All 3 of those can't even agree. And sometimes those numbers are can be 100 points
Drastically different.
Let's talk about that when we come back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code radio50. 303-325-2776. That's 303-325-2776.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM, 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR and MLS 298191. Equal credit lender.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Tired of walking into gun stores and seeing the same guns everywhere you go? Check out our sponsor, Old Steel Historical Firearms. Hi, this is Scott Watley of Sportsman of Colorado. At Old Steel, they specialize in the purchase and sale of historical firearms. Need to get your firearm collection appraised? They can help. Buy, sell, trade, and consignments are welcome at Old Steel. Open 10 to 6, Monday through Saturday. Old Steel Historical Firearms is located at 12 East Girard Avenue in Inglewood. That's just 2 blocks north of Hamden off Broadway. Now you can own a piece of history at Old Steel Historical Firearms. Call 720-662-7252. That's 720-662-7252. Check out their website, oldsteelguns.com.
Well, we did it now. Hi, Dan Johnson from Lynn Lyle Chevrolet, and we received a special allocation of over 600 new Chevrolets, and we're out of room. So to relieve our problem, check these deals out. A 2017 Silverado Crew Cab 4x4 for up to $11,000 off MSRP, or lease a 2017 Chevy Cruze for only $199 a month, sign and drive, or a 2017 Chevrolet Equinox for up to $6,000 off MSRP. Go east and pay the lease. Lynn Lyle Chevrolet, I-225 in East Colfax, or on the web at lynnlylechevy.com. Chevy, find new roads.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio and a special edition of Your Money Matters, brought to you by Affordable Interest Mortgage, 720-895-0500. Hey, if you've been told no before, I suggest you give Kurt and his crew a call. The answer could still possibly be no, but they will do their very best to help you. A lot of new programs out, a lot of new things that they know about that maybe your regular mortgage lender at a bank won't know. So give them a call, 720-895-0500. Before we pick up on FICO scores, Kurt, it's an All About You event.
Yes.
Tell us about that.
The All About You event is just an event that I'm putting on this summer that anyone who does a loan with us that just starts the process by the end of the month will receive a $300 gift card for either Home Depot, Lowe's, or Bed Bath & Beyond. And then at the end of the event, we take all the customers that we've had over the last couple months, we put them into a drawing, and one person's name will be drawn out, and they will either get $1,000 cash, 3 nights in Breckenridge whenever they want to go, or a 55-inch TV.
Wow.
That's just our way of saying thank you.
Well, that's pretty cool. So that's effective now?
Effective right now.
All right.
And all you have to do is, you give us a call, and we just start the process. We don't have to close the loan right now. We just start the process. I have to have a beginning and an end, so the end of September is when that event ends.
All right. 720-895-0500. It's all about you. Again, your choice, $300 gift card you'll get from Home Depot, Lowe's, or Bed Bath & Beyond. Then at the end of the event, they're going to be doing a drawing for $1,000 in cash or a 3-night stay in Breckenridge or a nice 55-inch TV. So that's a pretty cool offer there. Now, we were talking about FICO scores before the break. I was talking about the credit bureaus. So there's Equifax, Experian, TransUnion.
We don't know how long Equifax will stay around, but go ahead.
Currently, there's those, yeah. Man, you wonder how these breaches just keep happening with these such high profile. And they've got good, or you would think they would have good security on their IT, all the different things.
Well, Equifax was told months in advance to protect them from this virus or this possibility, and they ignored it. That's the tragic thing. They were told by their people, you need to do this to fix it so this doesn't happen. Well, guess what? This happened because they didn't do the fix. I'm like, really, 140 million people?
Wow.
It's caused a lot of havoc for the consumer more than for us. It's just caused a lot of havoc. How do you trust anything at this point?
Now, we're talking about FICO scores, the difference in those on all 3 of your bureaus. Sometimes they're relatively close, but most time, I've seen them 100 points apart. Why is that?
Because every lender that loans you money, whether it's a credit card installment or a mortgage loan, will report to different one, if sometimes all 3, but sometimes only report to one, because that's the agreement they have, because that's the only one they care about. So you might have, let's say you have 10 accounts out there, and 8 of them reported to all 3, but these 2 are not reported to all 3. They're only reported to Experian. Well, Experian score is going to be different than the rest, or 1 to Experian, 1 to TransUnion, and then the rest to all 3. So using their algorithms, or however that word is, that's how they determine how they come up with the score. Then they have different systems inside of that to determine the scoring system.
So what do you guys look at?
Well, we are required to what's called a mid-score. When we start, we will look at 1. It'll give us a basis. I'm not so concerned about the score when I first start with a customer as I'm concerned as to what it says inside the score.
Okay.
Because when you look at a credit report, the FICO score is what the banks look at. But your credit history will tell us what works for you, how you do things, how you pay your bills. Where do you really want to be if you're paying attention to the actual credit? From there, we can maybe give you advice on how you can then get that better and improve it, and we've talked about this many times on the show. FICO scores are important. What somebody will say, well, I got a credit score of a 700, or I got a 740, or I got an 800. Those scores are important as far as the lender goes. And again, we come back to risk. The lower the score, the higher the risk from past experience, so the lenders charge you more money. But what people don't realize, it's so simple to move your score up 20 to 40 to 60 points with little modifications and a lot of cash, if you understand how they score. Now, we're not a credit repair company, but from our experience at AIM, we can tell you different little things you can do. I had one customer with $1,000 move their score 75 points. With $1,000. Wow. They were 620, they went to a 695, and it saved them over $6,000 in excessive fees that they had to pay with $1,000. So your credit score is important. It doesn't mean you have to have a lot of credit, and it doesn't mean you pay everything off on time. There's a way of taking what you currently have and making it work to maximize the points without changing how you pay your bills.
Right. Are medical bills looked at very seriously? Sometimes you hear with people, they don't really look at medical stuff because those just happen to people. But they're still have some weight, right?
They have some weight to your score, depending on what has happened. A lot of times, in almost every customer that's ever had a medical bill, the insurance company won't pay the bill. You don't get told they're not paying the bill. Then all of a sudden you have this collection on your credit report. You had no idea that it wasn't paid by medical. Mm-hmm. That's a common thread that runs across a lot of medical bills. That or you didn't have insurance, surprisingly enough, with Obamacare, that you don't have insurance. But if you don't, then you have these medical bills. How do you pay for them? And it also doesn't always mean that hospitals and medical facilities sometimes want you to pay. I mean, Channel 9 did this great thing on it. And if you're not paying them, they just send you off to a collection company, sell it on maybe 10, 20 cents on the dollar. Sure. And then they're going to come after you and they might sell it to 2 or 3. Mm-hmm. Those things, they're fallacies in the system. Medical scores will affect it, but with the new regulations out, they cannot now put those kind of scores under unless they can actually prove it is you that they're against.
Right.
And they don't have near as much weight as they used to have in the past.
Mm-hmm. And, you work with a great credit person, and that's why I mentioned earlier in the segment, hey, if you've been told no, give you a call because, and we've interviewed the gentleman on the floor, but there may be some things, again, that are incorrect. We can get removed. Some deals you can pay off some different balances on credit cards or transfer some money where it gets them in better ratios. So you still owe the same money. You've just scattered it out a little different and can help you with getting approved, right?
It's kind of like when you're in school and what do I need? What does this teacher look for me to get an A?
Right.
What do I have to do to get that A? What do I have to do to get my score up as high as possible? And there are, like you just said, there's a lot of little tricks. The guy that I use, he explains to me how they score, how by doing this, it can move this score. And through those years of experience, I can look at that and say, okay, here's a suggestion you might want to try. I can actually print out a form and says, well, if you do this, this will happen, and this will happen. And it gives you an idea. I with all my clients that have some issues sometimes with their credit cards, how they max them out and how they do things. Mm-hmm. I said, make yourself a little note, put it in your wallet or your purse. This card can't go above this amount. Instead of putting everything on one card, split it over the other 4, and all of a sudden you're still spending the same amount of money, but your credit score is going up instead of maxing out 1 or 2 accounts because you like those cards. That's not something you want to get the points.
Right.
Like in Vegas, you want to win.
Sure.
You don't have to like the dealer. You want to win.
And you also, I believe that gentleman always promotes, even if you're not using a card, don't close it. That hurts, right?
That hurts drastically. You can pay it off every month. Charge it, pay it off, charge it, pay it off. That's fine. Or charge it and leave $100 on it for a couple months, then pay it off. Paying a little bit of interest there is going to save you, like that lady's, thousands of dollars later on. But do yourself not a favor and don't close the account. About once a year or once every 2 years, put $100 on it. Keep it active. While it sounds minor, it lets the credit companies know you know how to manage your money on all your cards. If you're not using credit, it's hard to get credit.
Right.
So paying maybe 8 or 9% on $100 is a whole lot cheaper than paying 1/4 point on a mortgage loan of $350 because you can't get that rate because your score is not high enough.
Take advantage about this event. It's all about you. And this is going to be going on here a few more weeks. So $300 gift card to Home Depot, Lowe's, Bed Bath & Beyond. Your choice of those 3 stores if you get involved with Kurt now and get a loan going. At the end of the event, they will be doing a drawing for $1,000 cash or a 3-night stay in Breckenridge or a 55-inch TV, 720-895-0500, AImortgage.net. We'll be right back.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those who have given so much. Donate now at freedomservicedogs.org.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
This is Scott Watley from my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms open 7 days a week. 720-468-0050.
Got a question for the station? Email info@crawfordbroadcasting.com. Now back to Haystack Help Radio.
And we are back. You're listening to Haystack Help Radio. Just turning on your radio, getting in the car. My name is Scott Watley. Kurt Rogers is with us, owner of Affordable Interest Mortgage and the sponsor of our show each week here on Your Money Matters. Talking about mortgages, a lot of things about qualifying, rates, all that. And again, if you've got questions, give us a call at 303-477-5600. So we're talking about what it takes to qualify for a mortgage. Kurt's gone through a few of them here. Your job, got to have a job. 2-year history is good. We talked about reserves, assets, bank accounts, your rent and mortgage history of at least 2 years. We've been talking about FICO scores. Now we're going to skip over to loan to value.
Loan to value is important because, again, remember, the bank is loaning money depending on your risk. You might have an 800 score and a lot of money in the bank. Now they're going to compare that to what's the risk with you borrowing 90 or 95% of the value of the home. Mm-hmm. The less money you involve in the purchase of a home has proven to be more risky than somebody that puts 20 or 25% down. We used to believe that 80% was the magic number, that where you put 20% down or your loan to value is 80% of the value of the house would give you the best score. But years ago, when we had the mortgage meltdown, the lenders changed that. They changed it to 75% and in some cases 70. What that means is if your loan to value is above 70, there is a hit to the cost of the loan. It's not to the rate, it's to the cost. Now, that will normally get absorbed in the rate, but it's a cost, and it's 1/4 point in conjunction with your score. The higher your score, it's 1/4. The lower your score, could go to 1/2, could go to 3/4, could go to a point, because now we have a lower score and a higher loan to value that is more risky to the bank. So they increase their fees to make that work. That is not something that is controlled by any mortgage company.
Right.
That is controlled by Fannie Mae and Freddie Mac. These are universal numbers across the board.
Mm-hmm.
They don't get to change them. So loan to value becomes important. There are loans out there that you might pay a little higher rate, and you have to determine if that works. Well, you can go to 95 or 98% and have no mortgage insurance and have a credit score of 700, don't need a 780. So those products are out there, but that's why you, like I said, what are important to qualifying? And this is something you need to consider. Does it really, should I put the money down? Should I not? What can I do with the money? Mm-hmm. So what's your loan to value?
What are you seeing in the appraisal world? Are things coming in pretty close to what you need and what you want there for appraisals?
Actually, they are much better. It's taken a while, but our turn times on appraisals are now 10 days, where it used to be 60. Mm-hmm. Where the appraisals have actually gotten a lot better. They're more accurate and more complete in what's going on. They had some issues because there was so much business for a while, the appraisers couldn't handle it. So that's gotten a lot better.
Sure. Now, let's talk about loan types. And again, we'll probably spend the rest of the show on this. There's a lot of programs out there. What do you guys, and what makes you different maybe in some of the things that you know about or that you are able to help people with that maybe your traditional bank maybe isn't going to go to all that length to help?
And we believe that's actually one of the things that we really do different than anybody else. When we talk to you, we want to know what your goals are. What are you planning on doing? Mm-hmm. Because this loan might be better than that loan. Now, we're not here to choose the loan you choose. That's not our job. Our job is to show you from what you tell us what fits that product, fits that program for you, where it can do you the best benefit. Maybe that's a 7-year ARM because you're a first-time home buyer and 90% of them move within the first 5 years. Maybe it is, maybe it isn't. But you have the right to see it for you to make the judgment. We don't make those judgments for you. We do offer all different types of programs, conventional FHA, VA, USDA to 100%. We offer the asset manager, the reverse mortgages. We offer jumbos. We offer rehab loans. We have all the product out there depending on what you want to do. I actually have a customer that wants to fix up his house and borrow the money to do it, and he didn't know if it could be done. And the question was, what he wants to fix is it has a crack in the frame, in the foundation. I actually have that loan. He did not know it was available. So he can actually get the foundation fixed on the purchase of this home. So there's different product out there to make it work. But some product might be an FHA that will give you mortgage insurance, but has a lower payment and a lower rate, and you can get rid of the mortgage insurance later. But it gets you into the house because it's a better product for what you want because of cash. So our job is to show those to you, explain how they work for you to choose. But you need to know which ones they are so you know which ones fit you.
Another area you look at is debt to income.
That was a big reason that we had problems in 2008.
Right.
Used to be, breathe on a mirror, tell us what you make, you have a loan. We don't care if you make it. They don't do that no more. They have ratios. The normal ratio is 33-43. And what we mean by that is 33% of what you gross is your mortgage payment. When you add all your other debt, it equals 43. That's what the banks find is ideal. They have just raised that. They will now go to 50% uncombined. Some banks will go a little bit higher, but that's where the mortgage insurance comes in because it protects the bank. Mm-hmm. So again, the debt to income ratio, what fits for you. When we sit with you, we're not trying to max your DTI. Well, we want to know what you feel comfortable with. We don't want you to either purchase or refinance a home and it pushes your payment limit so high that in a speed bump of life comes along and it's 6 months to a year, you start missing payments and you lose your house. That's not what we're looking for.
Right.
Where do you find something that fits?
Right. Let's talk about the self-employed folks a little bit because that's a
big field.
That's a struggle because most of us try to take advantages of all the tax deals that we can to pay the least amount we can. Again, we want to be patriotic, but not over patriotic, as some have said. So when you do that, a lot of times, boy, the income may not be there, but we're paying all our bills, we're doing great, and all that. So let's talk about how that works with that debt to income.
If you're self-employed, the first thing they're going to want to see is your tax returns. You may gross, let's say, $1 million, but you may net after you've taken your deduction, and your taxable income might be $40,000.
Mm-hmm.
Well, they're going to say your income is $40,000 a year. It doesn't mean you can't buy a house. There's other things that might be in your tax returns that shows that you're depreciating part of your business off, or there's other expenses like your company's paying for your vehicles. All of that can start to come back into play. But the banks are starting to learn, especially as rates go up, that they're able to do stated or self-employed customers in another format and allow them to count certain income that they weren't before. Different ways of doing that. We used to do the thing we talked about stated, and we would do stated income for self-employed people. Now it's kind of a little different in, give me your bank statements. Show me how much you're depositing either in your business account or in your personal account. We can use either one, and they will count that as income. They'll take year, 2 years, average it out, and say, this is your income, and this is what will qualify you on. Well, that works because a business person always has money flowing through the account,
Sure.
whether it's their personal or business. Well, if they're taking that as income, again, they want the ratios to be right, but they're doing loans. So we're seeing a lot more banks open up opportunities for self-employed people to be able to buy or refinance their home.
Again, Kurt Rogers is with us, Affordable Interest Mortgage, 720-895-0500, their website, aimortgage.net. And again, they can help you with all the things you need, conventional loans, FHA, VA, asset manager loan, which we'll try to touch on here before we get out here today, reverse mortgages. They can help, 720-895-0500. Now, another thing they look at is property type.
A lot of people don't think that matters, but it does. Property type could be a condo versus a house. Could be a manufactured home or a modular home versus a stick-built home. It could be a 2-unit versus a 1-unit. You may be going out to buy a duplex, and you want to live in one side of it, but there's a cost to doing that property type. The ones that have the least amount of extra hits to the loan is going to be a single-family home because that's where the majority of the people live. So the risk there is less. When you go to condo, because it's a little more transient, they charge a little bit more. So those are qualifying things to come in, because when the bank charges more, you have to fit into that DTI.
Sure.
That's kind of why I wanted to talk about it, so people have an idea of what it really takes when you go to sit down to get a loan, why we're asking certain questions. Because we want to do the loan as much as you do.
Sure.
But we want to make you fit into the right program that's for you. So the property types become very important.
Right. Now, we'll touch on this, and then we'll come back after our break. But why is now still a great time to refinance?
To me, it's kind of pretty simple. I grew up in a time like you did where my first mortgage loan was double digits, but even after that, I was paying 8-9%. We're so used to paying in the threes that we just think it's standard operating procedure. It's not. When you can borrow money, let's say around 3.5 to 3.75, and it's a tax deduction for you, and you have, let's say, $50,000 to $100,000 worth of equity, you'd like to move, but you don't want to pay the price for the new one. A lot of people are fixing up what they have. So now's the time to either get a second mortgage or to refinance and get that 3.5 to 3.75 and make it work for you. It's a whole lot cheaper, and you can change that. My wife and I did that. We talked about moving, and we finally said, no, let's just borrow the money and fix up the house. Now we have a house exactly the way we want it.
Sure.
So we're not going anywhere. And then paying low rates. And it's tax deductible. And it's not affecting my debt-to-income ratios. It's working better. Or those folks that, like I said earlier, that went out to buy a home and they had to get an FHA and they got mortgage insurance at $250 to $300 a month. Well, within 6 months to a year, because home values are going up, you can refinance out of that and get rid of that payment. So why would you not do that? If your rate's relatively the same and you're just blowing off a payment,
right?
You're improving your scenario. Plus, mortgage insurance is not tax deductible. There's other people that will take out money to pay off debt. You know, if you're paying 8, 9, 10% on credit cards, and you're only paying them the minimum payment, you'll always be paying them 8, 9, 10%. Go out and borrow the money and pay them off. I understand you're extending the term, but there's ways around that. We can refinance your loan from anywhere from 10 years, 11 years, 12 years, up to 29 years. You pick the term. You don't have to go all the way back. but you're still going to save so much money. Why? Because you're borrowing it at such a low rate. Amortized over a period of time, you can recapture that money so quickly.
Right. You're listening to Haystack Help Radio, special edition of Your Money Matters. We got to take our last break. We'll be back with more right after this.
Attorney Kevin Flesh has the experience and the knowledge to get more than an apology from those responsible for serious accidents. Sometimes saying, "I'm sorry," is enough.
Sorry about that.
It's all right.
But after a serious accident, "I'm sorry" just won't do.
Oops. Sorry about that. My bad.
When you've been in an accident and sorry just won't do, you need representation on your side that will get the job done. Call attorney Kevin Flesh at 303-806-8886. That's Kevin Flesh of Flesh Law at 303-806-8886 for a free consultation to find out if he can help you to get the compensation that you deserve.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR and MLS 298191. Equal credit lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam. 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical you'll see the difference. That's 303-321-1578, stackoptical.com.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Hi, Dan Johnson, General Manager at Len Lyle Chevrolet. You know, I hear it all the time. If you give me a good enough deal, I'll buy your vehicle. So here it is. A 2017 Crew Cab 4x4 loaded for up to $11,000 off MSRP. Or how about a 2017 Chevy Cruze, sign and drive lease for only $199 a month? Heck, that's cheaper than a used car. And we'll pay top dollar for your trade-in. So go east and pay the lease. Len Lyle Chevrolet, I-225 in East Colfax, or on the web at lenlylechevy.com. Chevy, find new roads.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio, special edition of Your Money Matters with our good friend Kurt Rogers from Affordable Interest Mortgage. Once again, their number is 720-895-0500. 720-895-0500. Giving you some tips today on qualifying for a mortgage and talked about rates a little earlier. Again, got to have a job. 2-year history is good there. Reserves, assets, and some money in the bank a little bit will help you. Your rent and mortgage history for 2 years, your FICO scores, we talked about that, loan to value, the different loan types, debt to income, property types. Still a great time to finance. And Kurt, let's wrap it up with this. We got about 5 minutes left. If someone wants to purchase a home but doesn't have a lot of money down, are there programs out there that can help them?
There's actually quite a few. A lot of people will call them first-time home buyers, but a first-time home buyer is maybe you getting a community second from the city you live in, or a down payment assistance loan. We offer those. CHFA is the most commonly known one here in Colorado, and they have 6 different programs. They have programs to where you only have to come up with about $1,000. Okay, understand, because of risk, that program's available, and it can help you, and there are people using it. But understand, you're not going to get rates in the mid-3s with no money down.
Right.
Okay, there's a risk. They will take you with credit scores of a 620. So you could be at the bottom end of that scale, and they'll still take you. Your rate might be higher. Their debt-to-income ratio qualifications are a little bit tighter. But yes, those loans are available. There are loans that they will give you 2% of your 3% down. So, and you don't have all those other things to deal with. You don't have all that extra risk because these banks are absorbing that risk. There's loans to where you can do a VA loan. There's so many. We've had the VA on the show before. So many veterans don't understand that they can really use that. They can actually get rates even lower than a conforming loan that's in the mid-3s, and they can get it with no mortgage insurance, and they can do 100% because of their time in the military. And time in the military, I'm working with a guy right now that he's got 6 years worth of reserve. Some people don't think you can get that done. We believe you can. And according to their regulations, 6 years in the reserves is the same as active duty, and they're fine with that. So there's a lot of folks out there that are veterans that could actually be looking at taking advantage of some of those programs. There's another program out there called USDA, which a lot of people are unaware of. They will actually, outside the Metro Denver area, they will do 100% financing on any kind of home. Whether it's got acreage or not. It's U.S. Department of Rural. And it doesn't mean it's rural, because you can go to Longmont and they can be tract homes, but they're a USDA home, and they'll do 100% on those. So there's different parts between here and Castle Rock. There's parts that are USDA, that are tract homes. Now think about buying a house in Castle Rock that's a USDA home. $400,000 or $500,000 home. So there's programs out there that make that work, so consumers can actually buy a home with less money. The main reason for that is the banks have the money, they want to loan it. They are required by regulations to make you meet certain qualifications. That's why I went over this part of the show. But they can't loan it if you don't apply for it. We are at the lowest percentage of people owning homes in the last 50 years. We're in the low 60s. Normally we're at 64 to 65. We've been as high as 68. There's, even with all the homes that are being sold, there's still the opportunity to become a homeowner, and it actually helps the economy. It helps everything.
Sure. Absolutely. Now, don't want to get out of here. We've got a couple minutes left. Let's talk about the asset manager.
That's the easiest loan for me to talk about it. I've had it since 2007. I'm getting a lot of activity on it because people are wanting to not change their spending habits, but become more secure in their house. The asset manager is a loan that's been out since 65. Basically, it attaches a checking account to a mortgage. It basically, every time you put in money into your checking account, it pays you the same rate as you're paying on the mortgage, applies it to your principal, and drives your payoff down. As your payoff goes down faster, your payment goes with it, because your payment is calculated on your average daily balance payoff. Because of that, you might save $8 a month in a payment this month. Then it goes to 10. Then it goes to 14. Then it goes to 20. And every month it keeps going down. And that's just with money that just sits in your account. You don't have to leave it there the whole month. You can pay your bills with it. But while it's sitting there, it's being effective for you. We take lazy money and put it to work with this account. We can take what a lot of customers have learned with this product is they might have $5,000 or $10,000 or $20,000 sitting in a savings account paying them nothing. They'll move it over to this account. It's still accessible. It didn't go anywhere.
Right.
But now they're getting paid the same rate. Let's say your rate's 4% and you move 20 grand. They're not going to pay you 4% of 20 grand and lower your payment. Now, if you need the money, take it out.
Mm-hmm.
But while it's sitting there, it becomes a savings account also for the loan. So a lot of people are learning how to own their home faster without changing one penny of their spending habits. And I have plenty of people, if you'd like to call me and talk to previous customers, I have hundreds. They will be more than happy to tell you just how well it's working.
Sure. And recently we hooked up one of our financial planners, and it's great when you see people that have been in financial planning world for a long, long time that love this kind of loan too and agree with you that it is a very good tool for most people.
Yeah, a man we both know, David Sechon. He knows, he heard about it. Him and I have sat and talked. He believed in this, but he didn't know this product was out there. Mm-hmm. So he's actually have clients that this can help them become more financially stable and take the stress off if the market dies or if I lose my job. My neighbor was unemployed for a year and a half, had this loan, and she was able to keep her payments, keep her score. Since 1999, there's only been one person that ever foreclosed on this loan. One. Since 1999. There were 13 million people foreclosed in 2008. It's just a great loan.
Yes, sir. Your disclosure, sir.
So, affordable interest mortgage, 7400 East Arapahoe Road, Suite 109, Centennial, Colorado. Regulated by the Division of Real Estate, NMLS 298191, and we are an equal credit lender.
Thank you for your time, sir.
No problem.
And thank you for joining us today for Haystack Help Radio. And your money matters. Check out our website, haystackhelp.com. There's a help box right there on the homepage. You can send us any questions through there. And leave it right here on KLZ 560. And have a great day.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.